I think there's so many misconceptions out there about business credit, and the word is thrown around by so many even lenders that are talking about stuff other than business credit that most entrepreneurs don't really know what business credit can actually do for them. And that's what I want to talk about today. And here's why: because it's the easiest money to get. Period. Let's start there. Like, there's so many ways that a business can get money, and there's different levels of complexity and difficulty in all of those ways, right? So when we look at business credit's the easiest way for a business owner to get money. If you try to get a loan, it's way harder. If you try to get a credit line, it's way harder. But business credit is one of those financial vehicles that any business owner can get. Every business owner is able to get this, and every business owner is able to get it regardless of cash flow or credit or collateral. So because it is capital that any of us can get, and we can easily get it, if we know how to do it, we can do it fairly quickly as well, then what can it actually do for us? So let's dive in and talk about that right now. So first of all, when we talk about business credit, we're really talking about credit that's for a business, credit that's in a business's name linked to the business EIN. So the biggest difference between consumer and commercial credit is with business credit, it's linked to the EIN, and consumer credit, it's linked to the social. And when we get business credit the right way, in a lot of cases, we cannot provide our social security number and still get it. So there's a couple benefits here. First of all, if you have credit issues, well, then it's a no-brainer. It's obvious. Like, you could still get $30,000 business credit cards, no matter how bad your credit may be. But even if you have exceptional credit, it's important because then there's no inquiries on your credit report when you're getting business credit cards. We can get these credit cards without putting personal inquiries on our credit reports, which really inhibit our ability to be able to get financing. And that's a valid point because that's what I deal with in my world. It's so frustrating that I see entrepreneurs come in, they wasted their inquiries getting credit cards for their business when they could have got credit cards with no inquiries. Now they literally can't get $25,000 or $50,000 loan they easily could have got just because they had those inquiries in their credit report. And yeah, it's that big of a deal. Okay, it's that big of a deal. Business credit inquiries are a really big deal because when a business lender or credit issuer sees an inquiry on your credit report, then what happens is they think somebody else is extending you money and they're inclined to not approve you or approve you for less money. So in our world, inquiries are the enemy. Like, if you have inquiries in your credit report, it can really inhibit your ability to get the loans, the credit lines that you want to get. So we never want to provide personal guarantees or credit checks unless we have to. And business credit, for example, is a way for us not to do that. So there's a lot of things that business credit can do for us. So let's start with some of the basics. First of all, it makes us more lendable, period. If you go to get a mortgage, if you go to get a car loan, if you go to get a personal credit card, you and I both know that your credit is going to be the driving factor of approval. But for some reason, as much as we accept this in the consumer world, so many entrepreneurs don't realize that business credit is equally as important to your ability to get money as well. So if you're out there trying to get loans and credit lines and credit cards and you've not built your business credit profile, well, then you're about as likely to succeed there as trying to get a mortgage or a car loan or consumer credit cards with no or bad consumer credit. So if you think of it like this, you're going to quickly realize that, hey, wait a second, not having business credit significantly inhibits your ability to be able to get loans and financing. And by the way, I oftentimes do a webinar where I give a quote from SBA that talks about exactly the same thing. SBA says, hey, look, business credit increases the probability you're going to get approved, and it helps you get approved for the most money at the best terms. And that's really what it will help you do. So when we look at business credit itself helps you get other kind of financing just by having a credit profile, just by having a credit score. When you go to get an equipment loan or a revenue lending loan or a term loan or an SBA loan, or a credit line from Fundbox or from On Deck or from anybody else or from Bank of America, business credit's a driving factor on if you'll get approved, how much money you'll get, and the rates and terms you're going to pay. So if you want to get more approvals, higher approval amounts, and better interest rates, that is directly related to your business credit profile and score quality. So the bottom line is, if you ever want to fund your business and you want to get approvals, you want to get the most money, you want to get the best terms, business credit's the driving factor of that. So that's one of the things it will do, is it just helps us make ourselves more lendable. It helps make us more likely to get loans and credit lines and credit cards. And by the way, if you're just coming in, Tell me where you're coming in from. Even give me your business a shout out, and I'll give you a shout out right here on the stream. Like Romar Family says, hey, are you interacting with clients? And I'm like, yeah, I always interact with you. So if you tell me where you're coming in from, if you even give me your business name, I'll give you a shout out here right on the live stream. So the first thing we see is that it helps us become more lendable. The second thing, and most important, I think one of the most important that business credit helps us do, is what business credit does for us is it helps our business fund itself. And that's really important, because if you want to get money, if you want to get a loan, if you want to get a credit line, you're going to have to do it in several areas. You're going to have to either get it because you've got consistent cash flow and revenue for like 6 months or a year plus. You can do it because you have good personal credit. You can do it because you have collateral like stocks, bonds, 401ks, IRAs, inventory, equipment, account receivables. But if you have none of these, if you don't have cash flow because you're a new business, your credit's bad, so you can't rely on credit, and you don't have collateral, well, then most lenders aren't going to want to lend you money. And that's a problem. And that's where a lot of business owners get stuck. They're trying to get the money they need to grow the business, but they're not able to because they don't have what we call in the funding space a lendable merit. You don't have a factor where a lender would want to give you money. You don't have the credit. You don't have the cash flow. You don't have the collateral. You don't have something where a lender's going to want to lend you money. So what business credit allows us to do is the business can actually fund itself using business credit, because it's the only kind of funding you don't need cash flow. You don't need credit. You don't need collateral. So all the factors that are necessary for loans and credit lines, none of them are applicable to business credit cards. So now we're able to come in and we're actually able to get approved for $5,000 Staples credit card, $10,000 Lowe's credit card, $15,000 Best Buy credit card, $20,000 Costco credit card, right? $20,000 MasterCard, all without personal guarantees or credit checks. Then we're able to use that for the business to fund itself. It doesn't need to rely on our personal credit. It doesn't need to rely on our personal guarantees. It doesn't need to rely on the collateral that we have. It doesn't need to rely on the cash flow our business has. It doesn't need to have any of that stuff. Just because you're building the profile and score, that asset alone that you've created, the business credit profile, that asset alone is enough for you to drive forward and for you to actually be able to get the money that you need. Just the business credit profile itself is the asset that's being used for the business to fund. So you're literally creating your credit profile and score that makes you more lendable. And then at the exact same time, you're creating an asset where the business can fund itself. Now you can go out and start getting a $10,000 limit account here, $20,000, $30,000. So then what we look at is, what do you need the money for? So if you're going to advise, I am Brooks. Thanks for coming in from BME Inc. in Chicago. Thanks for coming in and saying hello. So what we need to figure out is what you need the money for. And then for a typical business, for a normal business, like I'm spending money on these things, then business credit can pay for about 90% of whatever it is that we are typically spending money on. So the things I need to normally operate my business, like I'm sitting here, I need computers and cameras, and I need a desk, and I need a computer, or I need my keyboard, my mouse, I need my phone, right? I need lights here, all of this stuff, a microphone. 100% of this I can use business credit cards for. So now what happens is business credit gives us the ability for the business to fund itself, pay 90% of what we need to buy. Now we have a very small slither of stuff business credit won't pay for. Example, payroll, right? I can't use a Staples credit card to pay payroll. I can't use a Visa card to pay payroll. So there's still stuff I have to pay as an entrepreneur. But if all I have to worry about is getting the money to pay payroll, and all of the rest of the stuff I'm buying I can use on business credit without needing anything else, just building the credit gives me the money I need, it makes it way easier for our business to be able to get the money it needs, because business credit can fund the business itself. It doesn't need a lot of outside other capital to do the things that you need, like even Facebook ads, Google ads, that can even be used by business credit. As a matter of fact, we have a starter vendor that you can get the very first account you get. That what they do is they're a digital marketing agency. They report the account to their business credit reporting agencies. They help you build business credit. They'll build your websites. They can do Facebook ads, Google ads. Think about that. You could start building business credit and get with a marketing company and actually start running ads using that to build your initial business credit. So most of what you need to buy, business credit will be able to buy. Then we're left with the slither of stuff business credit won't be able to buy. And then from that, we're actually able from that point forward to be able to come in and then be able to get the money more easily, because our business credit profile score is built to build that other stuff. The other thing that business credit can do for us is it just helps us separate our liability, which means when we build business credit, we're not personally liable for a lot of the debt that we acquire, which means if we ever default or something bad happens or the economy shifts or whatever it may be, if we ever do default, then the lender can come after the business assets, but not ours. So it keeps our personal finances safe. It keeps our bank accounts safe, our stocks, our bonds, our 401ks, our IRAs, our vehicles, our homes, whatever assets we have. It helps us actually come in and it helps us separate those things. It helps us create some safety and security because we're actually building business credit. Now, the other thing it helps us do is it helps us get better insurance rates. So whatever insurance we need for the business, well, that's ultimately driven by business credit as well. So it helps us get lower insurance premiums on every type of insurance we need. It also helps us just have overall general credibility. By building business credit, it makes lenders more likely to give us money, but it also makes customers more likely to do business with us, clients more likely to stick with us, investors more likely to invest in us. Because business credit profiles and scores are basically are 100% publicly accessible, anybody that wants them can get them, then we have to think of business credit as our general reputation. Like if you pull a credit profile for somebody you're going to do business with and you see they're late on all these accounts or they've got a low score because they have no credit, their scores are in the toilet, you're going to think twice about doing business with somebody like that. And when we look at like the show, The Profit Market, Marcus Lemonis, I've seen multiple cases where he's decided not to invest in a company because he looked at their business credit reports and didn't like what he saw. So even potential investors are looking at this, as well as your prospects and your clients and your suppliers. Anybody in your circle is gauging your reputation based on your business credit quality. So we've got to make sure that we're actually coming in and that we're building business credit, because in doing so, then it gives us an overall better reputation. The other thing it does is it helps us just kind of spread out our usage across these two credit reports and scores. You see, if I try to use my consumer credit reports and scores to fund my business, well, they were never designed to do that. The scores are built like with factors like 30% of your score is utilization. Well, your limits are going to be higher as a consumer than they are as a business because they're not meant to support a business. So if you're trying to use consumer credit cards with their lower limits to fund a business, you're going to max out those credit cards. That's going to lower your score. So you don't want to do that. We want to get business credit cards with higher limits, which is one of the benefits, one of the things it could do for us. The limits are 10 to 100 times higher than consumer credit per SBA. So we're getting these very high limit accounts. And these very high limit accounts help us to be able to basically spend the money we need to spend in the business while leaving our personal credit, our personal utilization alone. And that helps our personal credit scores get higher. And that helps us use our personal credit scores for loans and credit lines and things that we actually need to actually use that for. So again, those are some of the basic things about what business credit can do. Now we're talking about the business being able to fund itself. It's going to help you get loans, credit lines. It's going to help you get better terms on insurance. It's going to help you have a better reputation for prospects, clients, potential investors that want to invest in your business. It's going to help you separate your liability. It's going to more than double your borrowing ability because you have all these credit cards around the consumer world. Now you have all these credit cards in the business world, and it more than doubles your borrowing ability as well. So when you combine all of this, business credit becomes very, 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 very powerful to help you actually get the money you need to fund your business. It alone can get you most of the money you need to fund your business with no other factor. So a lot of people use business credit to get the money they need to buy the stuff to build their business up, start generating revenue. Then once you start generating revenue, you're 6 months, 12 months in a business, then it becomes easier to open up and unlock all these other funding categories. So if I think about this like it's just one straight line, right? And in the beginning of our business, we're right here and we can get business credit cards. And that helps us generate revenue to get to here. And when we're here, we have revenue. And revenue helps us get term loans and lines of credit and revenue lending and merchant cash advances. Then we use this money to grow the business further. And then we get about a year in business. Now we start getting term loans. Now we start to be able to be considered for SBA loans. Now we start to get $50,000, $100,000, $150,000 loans and credit lines fairly easily. Then we start to move up to about 2 years in business. Now we start to get even more funding through SBA and $200,000 to $50,000 and $300,000 loans. So we think of this line of what we can do to get money to grow our business, and business credit's at the starting line. Business credit is one of the easiest things we can get in the beginning, and then use that to get to the next level, to the next level, to the next level, to the next level. And the next levels are typically based on revenue. So business credit helps us build the business and start generating revenue. Then as we start generating revenue, these more kind of areas of funding unlock. So it's like now we get here and unlocked. Now all these funding options work for us. Then we get here and it's like unlocked. All these funding options work for us. So business credit helps us go down this path and start unlocking all of these funding options for us. And as we move further down that path, more and more and more and more funding becomes available. And that's how we're actually using funding wisely to grow and scale our business, because we're taking what we can get at one stage and then we're using it to get to another stage, unlock that funding, get it to another stage, unlock that funding. It gets us all the way down the road. And business credit's what starts that process. And it's also what drives that process for us ultimately to be able to get the money that we need to be able to grow our business. So if you're interested in building business credit, make sure that you check out our 100% free guide on doing so. And Romar says, hey, only 9 watching. Will here is your first, like, I know, I'm telling you what's going on here. Well, then again, you're on one channel, by the way, Romar. So we actually live stream to a lot of different channels and groups. Okay. So that being said, if you are interested in building business credit for your business, then make sure you check out this 100% business credit building guide. You can go to creditsuite.com/EIN or scan that QR code. And then also, if you'd like to talk about all the money that you're able to get right now, then make sure you go to creditsuite.com/consult or scan this QR code. And that'll actually get you to a point where we can talk to you about all the money you can get now, give you tips and tactics to build your business credit, and talk about the things you could do to make your business more lendable. Thanks for tuning in. I look forward to seeing you next time where we talk about more cool ways to get the money you need to start and grow your business. Take care.